In today's video, we're going to be talking about the best monthly paying dividend stocks on Robinhood for 2021. Investing in monthly paying dividend stocks was one of the easiest ways for me to understand how the stock market actually worked. You know, me as a real estate investor, I own 2 rental properties and I collect rents from my tenants every single month, and that's how I'm able to, pay the mortgage, pay the bills. And monthly paying dividend stocks, those companies work in a very similar way. They have a business, they make money from the business, and some of that money that they make from the business, they pay it out in dividends every single month. So typically people that are into this type of strategy, they're more conservative, they may be closer to retirement. They want money every single month to be able to pay the bills. And before, when I was looking at the stock market, I thought it was just all gambling. I thought it was just penny trading. I thought it was just day trading. And no, it's completely different. There's many different ways to make money in the stock market, and the one that I gravitated to was the one that I could understand the easiest. And it just so happened it was monthly dividend stocks. And before we jump further into this video, don't forget to destroy the like button. Check out the links in the description for free stocks if you're brand new to investing, but everything down there is gonna be really helpful because I'm gonna put all the links in this video down there. So my Robinhood portfolio is sitting at $75,000, up 3% on the day. And I've been investing in monthly dividend paying stocks for over 3 years now, and I'm gonna be going over some of them to share my experience with you in investing with them. So the first one that I would say is the best one is gonna be Realty Income. And why is this the best one? Is because it's the most boringest company out there. And when I say boring, I mean really boring. I've been holding this company throughout the crash in 2020, and right now I currently owned over 200 shares. The next dividend payment that I'll be receiving on January 15th is gonna be $46.90. So for owning 200 shares of this company, I'm gonna be getting paid $46.90. Imagine taking these dividends and paying down one of your bills, or paying down Netflix, paying down, maybe buying a lunch for yourself. This is what I'm talking about when I'm saying getting your money to work for you. So more information about Realty Income. This company is a REIT, a real estate investment trust. And basically these guys, this type of company, they own commercial buildings, they own residential buildings, and the tenants, they pay them rents every single month. And a REIT has to take 90% of those rents and pay it out to the shareholders as dividends. That's how they're able to continually pay out monthly dividends. If we take a look at Realty Income's website, I want to show you some of their top 20 tenants here. So top 20 tenants: Walgreens, 7-Eleven, Dollar General. You guys know these companies, you guys know these brands, but I'm pretty sure you guys didn't know Realty Income is owning the building that they're doing business in. If we take a deeper dive into some of the analytical research from Realty Income, Morningstar is giving it a 3 out of 5 stars, basically saying that it is fair value. If it was 5 stars, that would mean it would be undervalued, and if it was 1 star, it would mean it's really expensive. So if we take a look at the fair value, it's sitting at $65. And if we take a look at the price of Realty Income today, it's sitting at $59.75. So there is like a $5 gap there where you might be able to make some profit. I've been holding Realty Income for years now and been continually investing in them. And like I said, it's a very boring company, but it works. So, when I first started, I had 1 share, made 22 cents. Over the years, I've bought hundreds of shares now. The last payment that I got, I only owned 100 shares. So recently I just made a big purchase. If you guys wanna know my buys and sells, links are gonna be in the description to join my Discord where you guys can figure that out. Last month, I made $23.40, and this month for owning 200 shares, I'll be seeing a $46.90 dividend. Another monthly paying dividend stock that I've owned for years now is AGNC. This one is at $15.34. My next payment from them is gonna be $24 for owning 200 shares. AGNC is a mortgage REIT. It's kind of similar to a regular REIT, but this one deals with mortgages. That's how they make their money. So when it comes to AGNC, it's a lot more riskier than Realty Income, in my opinion. So I'm not gonna be investing as much money. In Realty Income, I have probably over $11,000 invested. When it comes to AGNC, if we take a look at my total shares here, 200 shares, market value, just only $3,000. So if we take a look at the dividend payment from AGNC, we can see that we've been getting paid every single month. And if we scroll all the way to the bottom, July 10th, 2019 was the first time I collected dividends from them. And at that time, I had $20 in dividends. So one of my ultimate goals for my portfolio is to be able to make about $5,000 in dividends. And that's because my expenses every single month is, you guessed it, $5,000. I'm still far away from this goal, but definitely I'm a lot closer than I was today than I was a few years ago. And that's one thing I realized a long time ago, is that if I wanted to get to that $100,000 mark, which I have gotten to, or that $1 million mark, we're all gonna start at zero, but we're gonna have to invest some money into the stock market for these dividends if I want to get to those levels. So now you might be thinking, I don't wanna own just one company. That might be too risky for me. What if that company performs really poorly or goes bankrupt, whatever the case may be? Another way that you can collect monthly dividends is from a monthly dividend paying ETF. And basically an ETF is a collection of companies. They bring all of their dividends together and then they pay it out in monthly installments. So one of those, I own that as well, is SPHD, Power Shares S&P 500, high dividend, low volatility. That's a mouthful, sitting at $38.55. And I own 200 shares, market value is sitting at $7,700. And this is a decent amount of my portfolio, 8% of my portfolio. You can see after holding it for so long, I was able to even make a return of over $300. Dividend yield for something like this is 4 to 5%. That's been the rough range for SPHD. And 4 or 5%, that is typically what I shoot for when I'm looking at a dividend company. And if we jump into the dividends here, you can see I've been getting paid about $30 in dividends for the last few months. And before then, when I owned less shares, I was getting, the first time I ever collected a dividend payment was 1 share and I got 14 cents. So, I've been there, collecting only pennies when it comes to the dividends. And that's one question that I get a lot as well, is why would I spend $30 or whatever the case may be to collect only a few pennies in dividends? And that is the wrong mindset when you're going to start investing in a dividend company. I get that question a lot, and the way I answer it is, you're not spending money, all right? You're investing into a company. This company is sharing their profits with you. If you are not able to, comprehend that your money can work for you, then investing in the stock market is probably not for you. So you're not, like I said, you're not spending money, you're buying an asset. And this asset is always gonna have some type of value. So for example, if you invested in 1 share of SPHD for $38.55, you can buy it, hold it for a month, collect that monthly dividend, and let's say next month you decide to sell it. That 1 share of SPHD will still have a value, and you just have to sell it at market value at that time. The price of it will go up and down over time. We can't control that. We can't predict the future and we can't know how much it's gonna be, but it will still hold some type of value. So you're not really spending your money, you're investing it. So one of the reasons why investing in ETF is safer is because, holding a basket of stocks, if one company doesn't do well, all of the other companies in that ETF will be able to support that one company that's doing poorly. So in this segment, I'm gonna show you a list of monthly paying dividend stocks, and I'm gonna give you guys some tips on what to look out for. So monthly payers as of 2021, January 7th. And like I said, I don't want you guys to have all of these companies in your portfolio, because I've talked to some people with like 10 monthly paying dividend stocks in their portfolio, and I don't think that's gonna make up a good portfolio. I think 1 is enough. Like for me, I would say I have a lot in my portfolio. Off the list, we got AG&C. You can see the name of the company, the sector, the industry, the dividend yield, and the dividend safety. The best way to go about this is to invest in what you know. And for me, I knew real estate, I knew the ins and out of real estate investing already. So that's why I invested in a REIT. That's not really good for diversification, but since I understood it, I was more comfortable in investing in something that I understand. So another important thing is dividend safety. You want these companies to pay you dividends every single month and be able to cover it. The lower the dividend safety, the higher the chance of a dividend cut. So like I said earlier, where AG&C was really risky, the dividend safety is at 23. These AG&C has cut their dividends since I've owned them. They've cut it like 2 or 3 times now. But if we take a look at some of the higher dividend safety scores, we got Pembina. This one is one that I was looking into for many months. I just never pulled the trigger on it because I already own a lot of companies within this sector, so that's the only reason why. And another good one that I used to own was LTC Properties. This is in the real estate sector. Dividend yield 5.82 with a 52% dividend safety. And another one that I was invested in, which I sold recently, was PSEC. I got a lot of hate for owning PSEC. A lot of people hate this company for some reason, and I kind of understand why now. I kind of do. This one is in the financial sector, 12.9 dividend yield with a 30% dividend safety score. And the last one that I want to highlight that a lot of people like is Stag Industrial. This one is in the real estate sector, and it is a 4.76% dividend yield with a 45% dividend safety score. Stag is actually a company based out of Boston, which that's where I'm from. That's a fun fact. Like I said, it's a lot easier to invest in a company that you know and understand than something like in biotech. Something like I don't understand biotech at all, so I'm not gonna be investing in a biotech company. And lastly, if you guys are looking for the one that's gonna be the safest of them all, this is BND, Vanguard's Total Bond Market ETF. This is an ETF that pays monthly dividends. Bonds typically are gonna be the most secure type of investment that you can make, but that is because bonds are not gonna be crazy volatile. It's very, very, very stable. And typically when you're investing in bonds, the worse the stock market in general performs, the better bonds perform. And the better the stock market performs, the worse bonds perform. That's typically how it goes when it comes to investing in a bond ETF. So those are my best monthly paying dividend stocks, and that is my insight that I want to give to you from years of experience in investing in these companies. I'm invested thousands and thousands of dollars into them, and I've collected maybe $1,000+ in dividends over the last few years. So if you guys are interested in more videos like this, don't forget to check out these videos here. Don't forget to like, subscribe, hit that notification for more content just like this. Join the Discord community. Links are going to be in the description. Follow me on Instagram. Follow me on my second channel, and I'll see you guys in the next video. Peace.